Let me quickly talk to you about multi-member LLC tax filing. Everything you need to know. So if you are interested in this conversation, please stick till the end because you're going to learn a lot. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you already asked me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about multi-member LLC tax filing. All you got to know to file your taxes if you are a multi-member LLC. So let's look at the facts. So a multi-member LLC is a limited liability company with two or more members. Like a single-member LLC, a multi-member LLC is a lightweight business entity that actually combines the flexibility of a partnership on one hand with the limited liability of a corporation on the other hand. So you have flexibility and limited liability. Very important. So a two-member LLC is a multi-member LLC that protects its members' personal assets. And many business owners form LLCs because this structure has fewer ownership restrictions and protects their personal assets from business liabilities. And the most popular types of two-member LLCs are businesses run by a husband and wife, or businesses with friends as partners. And a multi-member LLC can be formed in all 50 states and can have as many owners as needed unless it chooses to form as an S corporation, which would limit the number of owners to 100. And so what are the advantages of forming a multi-member LLC? The first one is the liability protection. Okay, so this is really important because it's really key, and you also have the flexibility. Okay, that is typically associated with partnerships. So one thing you need to understand here is that the IRS will treat multi-member LLC for tax purposes depending on the underlying entity. By default, multi-member LLCs are taxed as general partnerships. As such, a multi-member LLC is a pass-through entity for tax purposes. That means the LLC business entity itself is not taxed, although it must file partnership tax returns with the IRS using Form 1065. So instead of paying taxes at the company level, the profits and losses are passed through to the individual members, typically in proportion to each member's share of ownership in the company. This is really important. So multi-member LLC do not have to elect to be taxed as a partnership, as the IRS automatically taxes them as a partnership by default. A multi-member LLC may choose to remain taxed as a partnership to benefit from pass-through taxation and avoid owing business income taxes. And a single-member LLC cannot be taxed as a partnership, never. By default, it has to be taxed as a sole proprietorship, or it can be as a disregard, as it can be as a corporation if it elects to be so. Let's talk about formation here. How do you form a multi-member LLC? Well, everything happens at the state level, okay? Forming a multi-member LLC is relatively simple and involves only a few steps. To form as an LLC, you must file your company's articles of organization with your state's Secretary of State office. So depending on the state in which you are living, your articles might also be referred to as certificate of organization or certificate of formation. And so you need to have an operating agreement. When an LLC has multiple owners, particularly ones that are not involved in the company's daily operation, it is clearly advisable to form an operating agreement. This is because sometimes members fall out of favor. There are conflicts, and they fall out of favor with each other, or the business fails. Okay, so a company's operating agreement will help outline the management of the day-to-day business functions, outline member rights and responsibilities to prevent disputes, and provides instruction for the transfer of ownership or events that would lead to a dissolution. Okay, and so you will have things like how much money each member has put into the LLC, whether members are required to make continued contributions, the cash value of member investments that were not cash, each owner's percentage of ownership, how members can buy out interest from a member that's leaving. Okay, have a member's interest will how that interest will be valued when they leave. Okay, so procedures done when a member wants to leave. So you have a constellation of very important pieces of information here. Okay, and you can get an employer identification number for your LLC. Yes. So once your multi-member LLC has been approved, you will be able to obtain what is known as an EIN, or employer identification number, which will serve as your company's identification number. An EIN is important to have when filing tax returns, when opening business bank accounts, processing employee payroll. And the cool thing is that employer identification number are available from the IRS for free. You don't have to pay for it. Don't let anybody just razzle dazzle you or just confuse you or trying to scam the hell out of you. No, those numbers, the EIN for your business is free. You just have to go through the IRS. You can file everything online. Okay, you can have you can apply for an EIN online. It's free. Let me talk to you about the obligations that we need to have here. So, what is the main tax obligation for each individual of a multi-member LLC? Well, as pass-through entities, multi-member LLC owners receive a Schedule K-1 each year to report the member's share of company's profits or losses. And each member's distributive share is generally specified in the company's operating agreement. In most cases, based on our research, the distributive share of profits or losses mirrors or is tied to the member's ownership interest in the business, but in some cases, the distributive share could be higher or lower. If the company made a profit during the tax year, each member may generally be responsible for taxes on their fair share of that profit, regardless of how much the member actually received in income from the business. And because LLC members are not classified as employees, each member is also responsible for the self-employment tax, which actually represents both the company and employer portion of Social Security and Medicare taxes. So this is really important to be clear on that. And so is there a way to change the way a multi-member LLC is taxed? It really depends on your definition here. As mentioned earlier, the default tax approach for multi-member LLCs is as a partnership. So in other words, by default, the IRS will classify you as a partnership. Multi-member LLC owners may, however, opt to be taxed as an S corporation, but they need to file IRS Form 2553, or they can be taxed as a C corporation. And so in this case, they need to file Form 8832. So choosing S corporation taxation does not change the pass-through taxation for the members of a multi-member LLC. However, LLC members who are active in the business may be treated as employees of the S corporation and compensated as such. And what happened here is that if the corporation distributes dividend income to owners, such dividend distributions are generally not subject to the Social Security and Medicare tax requirements. In other words, you don't have to pay actually self-employment taxes. Okay, and elected C corporation taxation may make sense for some multi-member LLCs that retain significant profits within the company instead of distributing them. So retained earnings are generally not subject to the double taxation often associated with corporate taxes. So at the end of the day, it's all about the strategy that you have as a multi-member LLC. Are you trying to scale and grow over time by retaining the profits in the business and reinvesting those profits, or you are trying to periodically distribute some of the cash earned through back to the owners, to the members? Okay, so this will determine really what your tax obligations are. But in any case, if you have to elect S corporation status, you need to file Form 2553. Or if you want to elect C corporation status, you need to file Form 8832. Very important. And one thing I want to say here is that there's nothing static here. Your business you might start as a multi-member LLC, and you might want to change a little one. This is why it's important to have a professional on hand. So you want to have somebody who's well versed in the subtleties of business taxes forms, so that you have a clear idea of what you're putting your foot so to speak. And one thing I also want to say here is that remember that you always need to, any decision you have to make sure that you refer back to the operating agreement so that everybody's on the same page and everybody agrees to what needs to be done. Let me dig a little further here. What is an LLC partnership? Because this will help you understand the whole thing about multi-member LLC. So multi-member LLCs are taxed as partnerships. So they do not have to pay or file taxes as the LLC. Instead, the profits and losses are the responsibility of each member. So when you file Form 1065, this is just an information form. You're just letting the IRS know what happened in the company during the last year so that the IRS can cross-check the data you are sending them to the data the individual members are filing. Okay, and so each member it's their responsibility. The profit and losses are the responsibility of each member. So they will pay taxes on their share of the profits and losses by filling out Schedule E, that's Form 1040, and attaching it to their personal tax return. From the share of LLC profits, each owner can pay themselves with a distribution. While the owner does not have to pay additional income tax on their distribution, they do have to pay self-employment tax. Okay, and this is very important. And so it's about 15.3%. So you have Social Security 12.9, and you have the Medicare part, which is Social Security 12.4 and Medicare 2.9%. When you add those two, it's 15.3. And how ownership is divided within the LLC should be outlined in your operating agreement. This is important. Okay, the formal term often used for LLC ownership is distributive share, also known as an LLC unit. So the partners' distributed shares are typically determined in proportion to their initial investments or based on their level of ongoing involvement with the day-to-day activities of the business. Okay, so this is really important. Let me give you two examples. Distributed share example number one. Mark, Sheila, and Mary want to start a coffee business. They all agree to split their distributed share of the profits or losses in thirds, since they are equally splitting all of the startup costs, daily operations, and so on. And scenario number two, you have distributed share, example number two. Kanye and Beyonce wants to start a food truck business. Kanye will operate the business on a daily basis and believes his efforts are worth 70% of ownership. Therefore, when outlining the distributed share, Kanye believes he should be responsible for 70% of profits and losses. Beyonce is then responsible for 30% of profits and losses, since her involvement is solely administrative and much less time intensive. Let's be a little granular here when it comes to taxes. So, multi-member LLC federal taxes. And a multi-member LLC does not file or pay taxes as the LLC. I've just already established that. Instead, the profits and losses will be the profits or losses, because you can't have both at the same time. The profits or losses will be the responsibility of each co-member in proportion to their distributive share. Here is a list of the various forms you will need to file. So you need to file income 1040. So this is Form 1040. So individual income tax form. All taxpayers must file this form. You have Schedule E. So partners report their individual share of profit or loss on their personal tax return. And you have Schedule SE. This form is for filing and paying your self-employment taxes. So the owner of a disregarded entity must pay Medicare and Social Security taxes. You have Form 1065. So this is an information form for partnerships to report profits and losses filed for the partners by the LLC. And you have Schedule K1, which is a document that details the profits and losses of an individual partner. So when we talk about multi-member LLC federal taxes, that's all you need to know. But you also need to think about state taxes, multi-member LLC state taxes. So the only difference between paying federal and state income taxes will be the forms you need to file. Some states like California and Texas require LLCs to pay a special business tax. So the tax is usually called a franchise tax, but that can also be a business excise tax or a privilege tax. So this can either be, you can actually pay this as a yearly fee with a flat amount, or it can be a percentage of the business like any other tax. Okay. You also have to think about your LLC employee tax. So if you hire employees for your business, you will have to register to your state's unemployment taxes. So these taxes can include things like paying for workers' compensation and withholding income taxes on behalf of your employees. And in order to report employee taxes, your LLC is required to have an EIN. You also need to think about FICA taxes. So taxes that are part of the Federal Insurance Contributions Act includes two types of taxes. They are already paid by employers and employees. You have Social Security and Medicare tax. And so employers are required to match their employees' FICA tax obligations. So the result is that an employer and employee must each pay 1/2 of the total FICA tax rate. You also need to think about unemployment taxes, right? So as an employer, you are required to pay both federal unemployment taxes, FUTA, and state unemployment taxes. So these taxes go towards unemployment benefit that fund workers who are looking for jobs, between jobs. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I want to talk to you now about accounting. Accounting is important because, this show is about multi-member LLC tax filing, but to get the numbers that you are going to use for your tax filing, you gotta have a clear and strong foundation for accounting and record keeping. So bookkeeping and accounting for LLCs, you must keep your multi-member LLC's finances in order to protect, you might actually keep them in order to protect your corporate veil by opening a dedicated business bank account, getting a business credit card, and creating a good business system. You can easily separate your personal and business finances, which you should do anyway. Okay, you need to segregate those two, and having a good accounting system has its benefits, really. So by making sure every possible deduction is monitored and recorded, good accounting can provide some considerable advantages. So you want to cut your tax bill by thousands of dollars each year. You want to prevent trouble with the IRS and state governments, so you don't get audited. You provide insight into where your money is going to and how to spend it. So this is really important that you get a clear idea about your cash flows, your cash inflows, and cash outflows. More specifically, you have your cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities, which is important if you're a multi-member LLC. You want to grow the business. And also, it saves you time and frustration. So when we speak about accounting, we speak about a whole system that allows you to actually make sure that you have the right data at the right time. Now, you can actually have accounting. You can take care of the accounting function in-house. In other words, you just build an entire department that takes care of that. It depends on how large the business is. You can also outsource the whole thing. In other words, there are actually agencies right now that actually allow you to outsource your accounting function, among other things. You can also use accounting software, for example, QuickBooks, Xero, Wave, you have Expensify. So it depends on the complexity of your accounting. If you have a very simple business structure, if your accounting is pretty simple and you yourself are a little financially inclined, you can actually run your own accounting without a problem. But as things become more sophisticated, more complex, it's just better to actually outsource it or just to hire full-time employees to kind of help you out. Either way, you have to think about what makes sense for your business. Let me wrap things up here. Let's just think about taxes in multi-member LLCs. Okay. Now, the takeaway from this show is that the IRS treats multi-member LLCs the same way as partnerships. So when filing taxes, a multi-member LLC must file a Form 1065 partnership return. This again is an information return only. because the tax liability will pass to the individual members on their personal tax returns. So each member in a multi-member LLC is given a K-1, which provides a report on each member's profits and losses. The K-1 then becomes part of each member's personal tax returns. And while a multi-member LLC is taxed like a partnership, it is not technically a partnership in regard to its classification or structure. An LLC is a completely different tax entity than a partnership and only uses the tax structure of a partnership because the IRS has not created a tax designation for LLCs. You can choose to have your LLCs taxed as an S corporation by filing Form 2553 with the IRS to change your classification. You can also choose to have your LLC treated as a C corporation for tax purposes by filing Form 8832 with the IRS. So the thing here again, if you are not sure which tax designation is best for you, discuss your situation with a couple of accountants to determine the appropriate option for your business. I mean, this show is purely informational. We're giving you the basics. We're giving you everything you need to understand. But if you have to make a specific decision about your specific business, it's better to speak to someone who specifically knows what they are talking about. Okay, for payments in an LLC, each member will receive what is referred to as capital distribution. So these are paid via check from the business bank account. Distribution is based on the percentage of each member's LLC ownership. So if you elect, let's say you elect for S corporation taxation status, each of the owners will need to draw what is considered a reasonable salary. Reasonable. So the S corporation should then file Form 1120S with the IRS. So those are things I really want you to think about as you make a decision, as you think about your multi-member LLC tax filing, as you think about the potential tax election you are interested in making, and always make sure that you are able to simplify things. That's all that really matters here. Thank you so much for your attention. I really appreciate it. Just to quickly recap, I was just talking to you about multi-member LLC tax filing. So I give you the facts, how the formation is done, the obligations, your taxes, accounting, and wrapping it up. Thank you so much. God bless you. I will see you next time. But until then, remember, stay marvelous.